Mortgage rates continue to fall, and many home buyers are nervous about the possibility of rising prices and a potential housing bubble. Joining us from our D.C. studio to weigh in on this and much more is First American Chief Economist Mark Fleming. And Mark, when you see interest rates, they're talking about a 30-year fixed rate mortgage, which could be at 3%. Doesn't that artificially inflate the price of a home as people compete for homes?
That's right. It increases your purchasing power. You can buy more home, and people go out. Actually, we're about to head into the heart of the spring home buying season, and even just the events of last week and definitely yesterday are driving rates lower to the point where the potential first-time home buyers basically got $25,000, $30,000 more of purchasing power just because of what happened. It looks like we might see rates that are historically low. I've been sort of surveying some of my economist colleagues in the housing finance space, and we think that if you break below 3.31, which was the prior record set in November of 2012 for a 30-year fixed, that might be the lowest rate that we've seen since the Great Depression, which arguably could say since we've been tracking the data for 30-year fixed-rate mortgages today.
And yet, Mark, you've got to be challenged as an economist right now because, as always, you got to bring a little psychology into it, right? Because offsetting those very low rates are the sentiment that we're seeing right now among the American public in the markets right now. Are people going to want to be going to open houses, for example, at this moment? And how much of a dampening effect could that have on demand?
Right. I think many of your prior guests in the last half an hour were basically saying there's not a lot that we can do with, financial rates and mortgage rates and 10-year yields that influence, your fear of getting sick. And that's the big one. And we see that clearly there's slowdown in economic activity, certainly globally. We're already seeing it more immediately in some of the transportation sector, for example, in the airlines, obviously. And so, yes, there's that trade-off of that. And so maybe that first-time home buyer is not going to care so much, depending upon what happens really with the virus outbreak here. But there's a clear benefit for existing homeowners with mortgages today. The mortgage application data that came out, 24% increase in the MBA app index for refinances. We estimate that there are 11 million households right now with mortgage rates between 4.1 and 4.5. And with a rate of 3.3 or 3.2 or 3.0, that's in the money for refinancing, and that puts discretionary dollars in people's pockets.
Mark, another piece of this is just the supply side of the equation, right? I mean, Freddie Mac just came out with a report saying that the U.S. housing market is undersupplied by about 3.3 million units for 2020, and that could continue getting worse. How do you factor this into the equation, especially now that we have rates going even lower? How is that a piece of this puzzle?
Right, that gets back to the beginning of the segment in prices. You can't buy what's not for sale, no matter how affordable it is or how much purchasing power you have. If you can't find the home you want to buy, and we have to remember that homes aren't like iPhones. They're, we call them heterogeneous or differentiated goods. You have to find something that you want to buy, that you want to live in, and with low supply, it becomes that much harder to do so. And so that's going to govern. That doesn't change when rates go down, and that's going to make even the competition for what is for sale that much more intense in the spring, which will drive prices up.
Mark, so we're in this situation where, like you mentioned, we have a very low interest rate environment, which should help the housing market. But when we look at the fact that a lot of people can't find affordable homes, how do home builders sort of navigate that? Do they start building things and hope that they get sold? How do you sort of navigate all of that?
Oh, I think that's been a narrative that's been talked about for a number of years now, which is that, obviously we need more housing. Building more stock is a solution, certainly, for doing that. And in the last 6 months to a year, we've seen big gains in the ability of home builders to find and make the economics work of building at that lower price point, which is the all-important entry-level area. And so that's beginning to pick up. We've actually seen, because of the mild winter, construction and permits and starts have been pretty good by the standards of January, February timeframes. So, while it's hard to see that, we just can't build them fast enough, is really probably the problem, even though we're finding that the ability to do so more economically for that starter price point.
Mark Fleming from First American, the chief economist there. Thank you for being here.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.